Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there's a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everyone in here does know that you do trade at your own sole discretion. Okay, so tonight's topic is a detailed analysis of how to draw region boxes, but I think we're going to expand that out to include some other very important, timely topics. And I'd like to do it as follows. Okay, let's do this. I want to start with a YM chart. Here we go. What screen is that on? 1. Okay. Now, I want to start with YM because YM has had a lot of, for those of you who are completely new, let me back up and start the things this way. What you're looking at here is we have several futures instruments that we trade, namely crude oil, gold. We don't trade NASDAQ anymore. I do, but not in the room. Russell and YM. So mainly these four. Crude oil is a commodity, $10 a tick. We're getting ready to roll that contract tomorrow. And gold is also $10 a tick. Russell, RTY, we just switched all the equities from the March to the June contract. So they're all June, $5 a tick. So each tick in that instrument, as well as YM, the mini Dow, is $5. Now, what you're looking at here on this chart is we're plugged into a data feed from Rhythmic that's provided by the broker. And when the data comes in for this instrument, YM, it renders onto this chart. And if I didn't have any of the Viper indicators on here, it would just be a raw bar chart, and it'd be very difficult to decide what kind of trades to take, where to get in, where to get out, and how to manage the trade. So what you're looking at here is indicators, and the indicators are a visual aid to help you see where to get into trades. Okay? We have background colors, we have bar colors, we have the bands here, the large band in the middle, it's called the mid band, 4 bands above it, 4 bands below it, and we'll talk about the significance of these in a second. But before we can start talking about region boxes, and when we say the term region box, we're referring to part of the object trader strategy, OT. For those of you taking a free trial or you're trading, you'll know it's a panel that sits off to the right here. And before we close out, I'll load it up and explain a little bit more about it. I want to focus more on the trades right now. And we'll talk a little bit later about OT and how it works. But needless to say, it's a panel on the right-hand side of your chart that allows you to take trades in a semi-automated fashion. So for instance, when we say put a region box, let's use an example over here. In the pre-market session, if you had taken and drawn a box around this area right here and engulfed the candles, and you enabled both sides, meaning that you can take longs and shorts, what happens is that the tool, OT, watches and looks for a bar to close outside of the region box, and it did right there. And so it fires a market order into the market on YM to sell the market short with however many contracts you have, 1, 2, 3, 4 or more. Now the automated part about it is, when we say semi-automated, the only work you really have to do is place the region box itself. Once that box is in place and you've programmed all your targets and stops and what have you in it, then it pretty much takes over. Let's say you had two targets. You had one target at maybe 10 ticks and then maybe another target at, I don't know, 20 ticks, something like that. You know, those would all be placed in there for you, unlike Chart Trader where you have to do it all manually, right? So that's the advantage of learning the OT tool and using it is that it takes care of all that for you. Let's say you had a 12 tick initial stop. It would come in and calculate 12 ticks above your entry fill and place an initial stop up there for you. If you had two contracts, it would put 2 up here automatically. You don't have to do anything. It takes care of all that for you. And then let's say you get a 10 tick scalp off here. It's called OCO, one cancels the other, meaning that once one lot is out of your 2 lot trade, it takes this remaining 2 initial stop down to 1 because you only have 1 contract on left, right? And then you can also program it to trail there's various trail stop features in it where it trails it down, trails it down, trails it down. And then either you would hit a target on the second contract here, for instance, say it was 20 ticks. I'm just putting numbers in here to illustrate what we're talking about. And the trail stop, let's say the trail stop was up here, it would cancel that. So that when your targets are hit, everything is canceled and done. That's the end of the trade. Now, we like YM. It's the mini Dow because we're getting a lot of good volatility in the Dow now. And I'm here in California, so the time here is Pacific time, and so 6:30 Pacific is the open of the equity markets. Now, going into the 6:30 open, was there a trend on YM, and if so, what was it? Going into 6:30, right here, this line, this vertical line at 6:30. Was there a trend on YM? And if so, what was it? Just checking to make sure everybody's still awake, had your coffee or your dinner, and you're ready to look at some charts. What direction's YM going into right here? What is that? Up or down? Just type in a U or a D. Yeah, it's up. It's up. You can see that it's kind of sideways up though, right? See, it goes up, pulls back, goes up, pulls back, up, pulls back. And so you are heading up into the open. Now, this is the one exception to the rule. Generally speaking, if you're in an uptrend, you're buying pullbacks to support. We're getting long only, right, in an uptrend. We all know that, right? In a downtrend, you're taking shorts only. The one exception to that is at the market open, because we want to let the market go either way. The market could go up, it could go down, and we know the current volatility, the way these futures markets have been, is that we can get 2-3 trend changes in a morning very easily, and we're going to look at that. You can get a lot of trend changes in the morning. Now, let me advance the chart, and we're going to work together on this. I'm going to advance the chart for the first 5 to 10 minutes after the market open, and you tell me if there is a trend change, if you see what you think is a trend change or not, and then we'll talk about how to trade it. All right, so I'm going to slowly advance this chart, and when you think you see a trend change, you type in TC for trend change. Ready? Okay, we're going to do it. Let's pretend we're looking at the market all together on YM in real time. I'll slowly advance the chart. And we're right here, 6:30 market open. Let's get some more bars here. Here we go. All right, here we go. All right, there's 6:31. Still 6:31. 6:33. Okay, 633. Blow up the bars a little bit bigger so you can see them. There we go. Okay, so coming up on 634. There's 634. Okay, remember what you're doing here. If you think you're seeing a trend change, you type in the letters TC, right? Okay. All right, I'm going to stop right there. Okay, now, I want to point out a couple of things first here before we look at the actual trend change itself. We do have a box that formed right here. And let me talk about the box since that is the topic of the webinar before we get into the trend change itself. Now, we have what's called a 2 or 3 bar rule. And what that means is that generally speaking, now that doesn't always hold true. It's quite possible that you can have a 1 or 2 bars, but generally we like to see at least 2 or 3 if we can, or more. And the tighter, the criteria for the box are the tighter the better, and we love to see the box at or on the midband. So I want to really blow this up and show some candles here. What you really want to do if you're going to use these boxes is you want to practice finding boxes and teaching your mind's eye to see them, and then use the OT tool to practice drawing them. Do that all in Sim for a while until you become an expert. Now, can you see this retracement right here? Okay, see how we went up? We couldn't quite take out the top. We couldn't even actually get there anymore. We pull back and we get 1, 2, 3 bars down and a doji candle. And then we have a series of 2 more candles, arguably 3, 1, 2, 3 more candles that are more or less side by side with each other. Does everybody see this? This pattern? 1, 2, 3, 4, 5. All of them more or less right next to each other. The wicks and the bodies are very tightly clustered. Does everybody see this right here? In fact, I'm going to go ahead and put a little box right around it like this. Can everybody see that? Yes. Okay, good. This would be a textbook midband box. It's a good size. The bottom of the box is roughly at 861-ish. Top of the box is located here at 869-ish. So the total size of the box is somewhere right around 8 ticks. So our rule of thumb is this. We generally want to see boxes in the size of 6 to 10 ticks. Once you get over 10 ticks, like 12, 14, up 18, whatever, you're getting into breakout trades, and we don't like that. And I'll show you examples of that in a little bit here. The tighter the box, the closer to the midband, the better. Now, that being said, it's quite possible you were filled long on this bar right here. Now, did you get a scalp off? It's hard to say where your target would have been. Maybe your target was out here. Obviously, that trade stopped out. That trade did not work out. This was a loss. You got popped. However, at 633, we had another box form almost exactly in the same location. Can everybody see where it is? Right here. Now, when you drew this second box, this is a question coming out. Would you and type in your feeling on this box as you look at what trades you want to take. We see what happens, so try to ignore that just for a second. And here, in fact, here's what I'm going to do. I want to back that up. Just pretend you don't know what's happening, and you draw that box at 6:33 tomorrow morning on YM, and it looks just exactly like that. Would you take long only, short only, or both? in terms of what direction of trade you would allow this region box to take. Long only would be that when you close outside, it would only take a long, no shorts. Short only, meaning that it would take a short and no longs. And both means that you turn on both sides. So whether it closes up, long, down, short. Long only, LO. Short only, SO, both B. If you drew this box tomorrow morning at 6:33 and it looked exactly like that, AM Pacific time on YM or any instrument, well, I don't care what you're trading, gold, oil, whatever, and then your market looked exactly like this, what would you do? Okay, we got a lot of shorts only. We got a lot of boths. A couple long onlys from Mario. Short. Now, in my opinion, I would allow both, and here is why. Technically speaking, you're still sideways to up. So while you can say that you can't make the case that we're no longer in an uptrend. However, you could say that we're starting to go sideways, and you probably are making note of the fact that you're starting to get a series of lower highs and lower lows, like this. Can everybody see this? This is really important for you to spend some chart time looking at your charts and quickly being able to see in real time what these swings are doing. Now, the predictor can help you. I turned it off for simplicity's sake, but the predictors are going to help because they're starting to go down. Right? It makes it a little more obvious, right? But if you don't have those on, you can just visually look and see this high did not even get here. It didn't, let alone break it. This got down to here. This didn't even get up to here, and now we're breaking support. So that is making the case that a short trade could set up here, yes? However, at the time the box is drawn, we don't know whether it's going to go ahead and burst up. Yes, my answer to this would be both. Exactly. This would be a box. Now, the size of this box here is right at the mid-band again, perfect location. Bottom is approximately at 64. Top is located here at 71, 72, so another 8-tick box, about roughly the same size and almost the same location as that one. So, you're well within the criteria of acceptable good boxes. Is everybody following the logic here? Okay, good. All right, let's advance the chart. Here's 633, 634, 634, 635 coming up. Now, I'm going to ask you this question. What is happening right here? Anybody? What is happening right here? No, it's not chopperoni. All right, let me draw something here that I think is going to help you. Let me draw what we call ABC. A, B, C. Now, the formation of B, A is the thrust in the direction of the move. So in this case, the thrust is clearly down. We all see that. Now, the length of the B retracement after the initial thrust can be fairly shallow, as it was right here. Right? It can be fairly shallow, or many, many times, and I know most of you have seen this, right? It can come right back up into here, kiss the midband, roll over, and give you a second shot to take that trade if you miss the initial box. That's what I'm trying to show you. This ABC pattern happens all the time, in different various forms. A, B, C. C is the follow-through to the downside. Now, if you drew another box up here, as it sat here for a couple of minutes, would this box right here be long only, short only, or both? The third box. This didn't happen, so you take that box. I don't want to be confusing about it. And technically speaking, the B retracement only really went to there. long only, short only, or both on the third box. Because let's pretend that you missed the first two boxes. You just didn't get them. Whatever, you were rubbing your dog's head, getting a cup of coffee, you missed, you look at it, but now you see this little retracement and you're like, hey, hold on a second. I missed that, but I might be able to jump in here. Good. So what we're saying here is that by the time this B retracement sets up, we are now convinced with this little shelfie holding as resistance, this is clearly the 1, 2, 3, 4th lower high, lower low setting up. We would only take shorts here. Contrasting that with here you're taking both, because at the time this box set up, it was unclear whether you were going to get continuation this way or a bona fide drop down to set the short up. Now, that's a good question. There's always a question of how do we know that a retracement is deep enough to go ahead and throw a box on it or take a market order and get short? Here's the rule of thumb, okay? Can you see where you're coming in this thrust move to the outermost box? Sometimes it'll come down into here. Oops, I didn't want that. Wait a minute, hold on. I didn't want that. Sometimes wicks and bars of bodies of candles will come down in here like this. It can come lower. It can joggle around here a little bit. But here's the important thing. Can you see line 2, this red line right here? And can you see the stealth line right here? See the stealth line, the sneaky little stealth line? We've had that for years. It's called the stealth line. Now, notice how these bars on this retracement pierce through line 2 and the stealth, forming a box right here. In my opinion, this is deep enough. Sometimes it'll go to here. Sometimes it'll come all the way up into here. These are second chances to take to get into a trade that you might have missed at a higher level. Yeah, Ken, I'm not going to address that right now. I don't want to confuse the issue because clearly we're setting up short trades right here. Yeah, I find that particular trade is extremely confusing to people, and I see what you're saying, but I'm going to choose to avoid that. Okay, everybody seeing what's going on here? If there's any questions, just throw them in there. I want to make sure it's really clear for everybody, so tomorrow morning when you see these patterns, that it becomes clear what to do. All right, good. I don't see any more questions. Let's advance the chart and proceed on with how this trade unfolded. And you can see that we got filled short. Let me advance the chart a little bit so you can see what happened here. In the case of this box, the second box right here, you got filled on the close of that bar short. In the case of this box right here, if you'd drawn it like I have it shown, you were filled short on the close of this bar right here. And it looks to me like you got from 50 to 40, so you got your 10-tick scalp off right here. Everybody knows what that is. So if you're trading 2 contracts, we're going for usually 8 to 10 ticks on our first lot. So you're filled short at 50. Your 10-tick initial target on lot number 1 is 10 ticks, so that's actually like right here. So bammo, you'd get the scalpy off. Now let me tell you another thing you want to do, and most of you who have been to my webinars already know this, is if for some reason you were not able to engage object trader here, let's say hypothetically you just wanted to get in and you hit market order and you jumped in, okay? That can happen. Fast moving markets, sometimes you hit market order and you just get in, right? That's okay. So let's say you're filled at 50 less 12, so your 2 initial stop on your 2 lot is 12 ticks above here, so that'd be 62. So your stop is actually sitting right up here, your initial stop. Now, when 12 ticks above here, initial stop, 2 lot, right? We get the scalpy off. This goes to 1. Now, if you're manually handling this and you're not engaged with OT, it handling the trail stop, generally you want to take this down to at least 2 ticks behind your entry on the remaining 1 lot, and then trail it after that. This gives you the free trade. Free trade meaning no matter what happens at this point, you're going to make money. right? No matter what happened, because you hit 10 tick target and you have a 2 tick stop. Net, if the thing flew in your face and some funky news came out, you'd still net 8 ticks, yes? That makes sense? All right. Now, I'm going to advance this chart. Stand by. And we can see that we come down all the way here to 23. Now, there are a couple of different ways to handle the management of the second lot. The first way is this, and you've heard me say this before. You can put a fixed target in of, say, 20 ticks. Now, this is going to vary per instrument. NASDAQ, if you're trading it, it's going to be a little bit larger because it has bigger runs, right? Russell is going to be a little bit different. You want to study your instrument, and you want to see how much follow-through you get past that 10-tick mark. Now, if you go look at your instrument and you say, wow, you know what, Charles, I've looked at this quite a bit, and I've noticed that after the drops 20 ticks, plus or minus, say, 5 ticks, I noticed that it gets a retrace. And so sometimes trailing a stop with my remaining contract doesn't necessarily make any sense, because in some cases, I'm just better off taking the 20 ticks. You see what I'm saying? I'll hit my 10, I'll hit my 20, and I'm done with that trade. Now, there are cases where the market could run 50 to 100 plus ticks, and you're going to choke that trade off artificially short of what it could make. Yeah, you see that on Russell, Lewis? You see that a lot on Russell. Yeah, it goes 20 ticks, and then it'll pull back 10, 12. It'll go 30 ticks, and it'll pull back 15. So, you know, you got your trade-off is this. You either engage the trail stop and trail it on down using line 2 in the case of the short and or stealth, and when that's breached, it takes you out. The second method is you just put a fixed 20-tick target in. That's the other way to do it. And when it's hit, you're guaranteed your 30 ticks. Guaranteed your 30 ticks. Now, I'm going to advance this chart, and I believe at some point after this point here, there is another trade entry set up. And I'll help you out. It's short, of course. We all know we're shorting now, right? We got the red background, stair-stepping down, lower highs, lower lows. We're only looking for shorts, and there's another entry coming up, and you type in a T when you think you see it. Okay, this one's done. We got our 10, we got our 20, we're done. We're out. That's out. This trade's done. We're looking for another entry. I'm going to slowly advance the chart, and you type in a T when you think you see another entry. Don't type in T yet. I haven't started moving the chart. We just got out of this one. Don't type in a T yet. Don't type in a T. Okay, hold on. Here we go. All right, type in a T. I'm going to slowly advance the chart. Here we go. Okay, you can see here you left some money on the table there, right, with the 20-tick target. Went another 10 ticks, so you choked it off. That's all right. Let's keep it going. Okay, now you're at 6:36. You're about 6 minutes into the market. On YM, 6:37 Pacific time. Let me blow the bars up just a little bit bigger. Remember, when you see another trade entry, you're going to type a T in, right? Okay. Right at 6:37. 7 minutes into the market open. Let's advance it a little bit more. Okay, let me stop it there. Let me stop it right there. No. Okay, let me address this. Let me address this. There was a handful of you that typed in a T when you saw these bars form right here. Though you are what I call an early adopter. In other words, you're seeing the trade early. Everybody in here tonight and listening to the recording of this tomorrow, I want you to try to get your trading eye trained to see this. You want to get in as early as possible. The later you get in, the more difficult it is because you're playing catch up. You're getting in when everybody else is already taking scalping profits. Now, a handful of you typed in a T when you saw these bars form. I'd say you're kind of a middle adopter trader. In other words, you saw it, but you needed convinced a little more with some more bars. That's okay, as long as it stays within the region of acceptability to get in. Now, we said over here that we have in a nice protracted long or short trend, you might only get shallow retracements. You're not going to get back to the midband all the time. It might just breach stealth and line 2, and that's exactly what it did here. So those of you who were paying attention when I showed this one caught this one. Good. Now, there was a small handful of you, and I'm not going to name you, who didn't type in a T until all the way down here. Now, that's a problem. That's something you need to work on. All right? You're getting in way too late. By the time you're getting in, this trader is already getting ready to pull profits off and take profits. Say you're closed short on the close of this bar right here at, I don't know, 824, 823-ish. 10 ticks would be what? 14. 14 is right here. 13, 14. There's a scalp off right there. So by the time you're seeing to get in, traders are already taking profits on the shorts that they got in up here. Please, 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 a million times please, I want everybody to pinky swear with me tonight that you're going to try to get market play, get market replay, and try to look to see these entries. Try to look to see the entries early. If you did that one thing, if you just took your chart and you just went back and forth like this and looked for boxes, just like we're doing right here. I see a box. Okay, now I see it. Pulls back, breaks stealth, breaks line 2. Okay, I'm getting short. I see the box. Cool. I see the short, comes down, drops 25 ticks, 30 ticks. Could have peeled my 10 and my 20. Okay, I'm looking for another entry. I'm waiting for a pullback. I know it's got to go at least through here and possibly up to here. So we're thinking about that as we watch it. See it? See it? We're advancing it. We're advancing it. You're seeing it. You're seeing it. You're boxing. You're hitting market order. You're putting a limit order in here. By hook or by crook, you're getting short, right? If you're not getting in until markets are way down here, what's happening is this. And you got to fight this and you got to try to fix it. It's this. You need to see follow through of a market continue in a down move to be convinced that it's time to get in. Is that true? I know it is, because I used to do the same exact thing. I used to do exactly that. I wouldn't get into a trade until down here. You need to see more bars to be convinced that it's tanking again. And so you don't pull the trigger till down here where other people are already taking profits. I know that's true. Some of you are typing in, that's exactly what's happening. How do you fix that? That's an important thing to fix, wouldn't you agree? In fact, I'd go so far as to say that's probably the most important thing to fix. If you are faced with this situation that I'm showing you right here, you have to address this if you're going to be successful trading. You have to address it. You can't keep getting in here 10, 15 ticks late, because there's going to be a lot of times what's going to happen is not this one happened to follow through. Okay, here was your initial stop up here. You filled at 24, less 12 is, or no, plus is 36. Your initial stop is actually sitting up there for the 2 lot. You peel the 1 lot off. You take the down to 2 ticks behind the entry, and then you start trailing down like this. Now, if you had a 20 tick target for your second lot, that would have come off down right around this area right here pretty easily. There's your 20. Now, for you, those of you with the runners, you're following stealth in line 2. For usually those who didn't choke off with the 20 tick deal, you catch this runner that didn't stop you out until all the way down somewhere around here. So what I want you to do, everybody here, so the takeaway from this, here's the action plan. Here's the action plan. Okay. Number 1. pick an instrument to trade. And I'm going to put the caveat here, no more than 2. Please, 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 a million times, please, do not break that rule, especially if you're brand new and you're learning and you're trying to figure all this stuff out on how to be consistent. Hold on a second. From experience, I can tell you that it's very, very difficult, even for more advanced traders, to watch more than 2 instruments. It's almost physically impossible because this takes a lot of work. It takes a lot of attention to see these entries and to use the tools and to get in, hit the targets, manage the stops, and then look for another entry and get in and manage the trail and all that sort of stuff. Can you imagine doing this twice at the same time, or 3 times, or 4 times? It's virtually impossible. You can't do it. Please stick to no more than 2. I'm begging you. All right. Number 2, you've got to work on your trade entries. Trade entry practice is critical. Trade entries, trade entries, trade entries. I'm not going to write it 3 times. I'll just put dots there. The entry is the most important thing. Now look, I'm going to go back to this one right here. For those of you who are starting off, or you're working in a combine and you're trying to get or an evaluation period with one-up trader, I would suggest looking at RTY and YM. That would be my suggestion, to start with those. For now, I wouldn't mess with oil. I wouldn't mess with gold. They're $10 tick instruments. Sometimes you get good movement. Sometimes you don't. Sometimes their movement is a little more advanced than you might be used to. Just watch those 2 instruments and do your best to find good trade entries on those 2. Now, if you haven't learned, yeah, they're very low risk. If you manage the trades, you can, like, for instance, right here, I'm just going to look at this real quick. Let's say you took this trade and this trade. How much money did you make? Short, short, and short. Let's say you didn't get the runner. You just got the 10 and the 20. 10 and 20, 10 and 20. How much did each of these trades make? Or total? Either way, what was the total? Anybody? Well, 30 ticks at $1 a tick is $150 a trade, right? There's 150 right there, 30 ticks. And there's 150 right there, 30 ticks. So you're at 645 and you've made $300. I know some of you would stop trading right there. Now, if you caught the runner on the second one, if you didn't choke it off at 20 ticks on that runner, you caught another, well, it looks to me like down here at 90, and you choked this one off at 04. What's that? Another 14 ticks. So the trail stop trader got another, $60. 70, another $70. So this trade would actually be more like $220, $225, something like that. I see some of you saying I would be shutting her down. You could. So here's the thing. If you're going to qualify for a one-up trader account, let's say that you're going for, let me follow through on this and just put it in here. Now, we explained this all in the room. If you don't know what this is, then we'll talk about it in the morning. We have a partnership with a one-up trader. And we have a $25,000 account. Anybody remember how much money you have to make to get a $25,000 trading account? Anybody remember off the top of your head? How much money do you need to make? How much profit? That's right. Some of you know right off the top of your head. Excellent. 1,500. 10 trading days. Now that's 10. Now it doesn't have to be 10 consecutive. Any 10 trading days. Or no, I'm sorry, 15. 15. I'm sorry about that. This is how you got to look at it, right? Now I'm just going to do these two. They have other accounts. I just want to try to keep it simple. $50,000 account. Anybody remember that one? How much you got to make to get $50,000 funded account to trade? 3,000. That's right. Who's saying that? Ken, you're on top of it. You're on top of it tonight, buddy. In 15 trading days. You could take 30 days to get 15 trading days because it's not consecutive, right? It's not consecutive. You could take 45 days to get. It doesn't matter. It could take 60 days. As long as in the account there is at least 15 active trading days where trades were taken. So, let's just do some simple math. To get 15 trading days to get funded on a $25,000 trading account, how much money do you need to make net per day? This one right here. Pretty simple math. About 100 a day. What does that mean? What do you mean 100 a day? What are you talking about? Well, how many of these trades do you have to take with a 10 and 20 tick? How many of those trades do you have to take to hit 100 a day? One. That's right. One. If you took one of these trades per day for 15 days, you would be funded a $25,000 trading account. One. All right. Let's say you want the $50,000 one. How much do you have to make in this one? 200 a day. How many of these trades do you have to take in a day to get 200 a day? The ones we're showing right here. 2. I know people who sometimes take as many as 15 trades in a day. Do you think that's necessary? Do you think it's necessary to take 15? I mean, yes or no? I'm not being facetious. This is an actual question. Do you need to take 15 trades a day to get funded on any of these accounts? No. Absolutely not. I would go so far as to say you could do it in less than 5. So with that mindset, when we go into the day, what is our goal? Is it to try to catch every trade that comes along, every call in the room? We're going to try to nail every call. There's a call. Better jump on that. There's another call. Better jump on that. Holy cow, better jump on that. I heard a call. Wait a minute, Russell, let me go look at that chart. Whoa, wait, good. They're getting long on oil. Let's get an oil chart up here. Do you need to do all that and chase it around? No. You don't need to do that. So here's what I'm going to say. Wait for the best trade opportunities. And when I say that, we're all a little bit different here, right? We're all a little bit different. Furthermore, you only need to take, I'm just going to put a couple numbers in here. I'd say take, okay, let's just put a couple numbers up here. 1, 2, 4, or 5 trades max. Oh, and let me put it clear. Let me make this very clear. Our goal is to make the most amount of money with, and this is important, the least amount of trades. Everybody understand that? Our goal is to make the most amount of money we can with the least amount of trades. Not the most amount of trades, the least amount of trades. So if you say, look, Charles, I want to get this $25,000 account. I want to get funded. I want to start making money. I want to start banking some coin every day. I want to get that account. I just want to make 100 to 150 a day in 15 days and get funded and get on with this, okay? Well, then this is what you need to look for. You've got to go in and spot perfectly, find an instrument. You don't have to trade 2 instruments. You can just work with YM or Russell. Good. Hardy says, I'm going to focus on just getting funded. That's why I'm talking about this. That is precisely why I'm talking about this. I hear so many traders like, oh, man, you know, I took so many trades. I got beat up at the open. I got in too fast and it stopped me out. And I chased it around. I came back to break even. And then I traded a little bit more. I caught it a winner. I was up a little bit. And then I went back to break even. And, man, you know what? I went away and I lost money. How many times that happened to you? Anybody? Hey, listen, most of you know me. You've heard me say it a million times. I'm not ashamed of it. I blew up several accounts in my day. Way back, 15, 20 years ago, I blew them up regularly. I know exactly what it's like to blow through a lot of money trading. I did it myself. They didn't have these programs back then. Now they do. Make sure if you sign up for OneUp, we have a discount code for you. Okay? We have a discount code. The beauty of OneUp Trader and working with partners like OneUp who fund trader accounts is that you're not risking your own capital. You can spend less than $100 a month. I think the 25K one, less the 25% discount, is only like 93 and change a month to access $25,000 in trading capital. Where else can you get that? I mean, how long would it take for you, collectively, all of us here, to build up a $25,000 or $50,000 trading account? Say if you're starting off with a small grub stake like 5 or 10 grand. A year? More? A year and a half? I mean, you have to make a lot of money to get up there. You could leverage that right away by spending a little bit of money to go through the evaluation period and focus on taking 1 or 2 trades. Just all you need to do is knock out a couple $100 a day, and you can get funded on these accounts. Right, good. Any questions on how that works? Does everybody have the discount code? 25% discount code for OneUp. Everybody have that? If you don't, let me know because I'll give it to you. Brian, you don't have it? Hey, Brian, you going to be in the live room tomorrow morning? Terry? Anybody going to be? You guys going to be in the room? Hardy says, I like risking their money versus mine. That's the whole point of it. That's the whole point of it. All right, stand by. I thought everybody had it. Okay. Some of you might have taken off early from the live room. We put it in the live room this morning. Let me see if I can. I know Gary has it. I thought I had it written down somewhere. Let me ping him on Skype and see if I can get that discount code. So, in fact, do you want to look at more? You want to look at more trades, or you want to see how OneUp works? Oh, George, you're the best. George just typed it in. Oh, nice. Thank you, George. You are the best. This is it here. I'll just put it in here like this. OneUpTrader.com. Discount code where you get 25% off is capital letters. Oh, some of you are typing it in. Cool. Caps VS 1U 1 capital R1, and that is a 25% discount. Some of you weren't in the live room when we went. You want to put this in when you go to checkout. Discount taken at checkout. And let me just show where that is so everybody knows. And clear this up because we get this coming up all the time. Okay, checkout. Please write that down. Put it in your notebook. Because it's not on the website. It's not anywhere. It's right here. You're gonna have to jot that down. And let me come over to the site and quickly show you how this works. Just take a second and answer any further questions you might have about it. They are our funding partner. We've done a lot of business with them over the past, 6 months or so, and we have a very good partnership with them. And we have a lot of traders who are set up with accounts over there going through the evaluation period, and quite a few already have been funded. So it's very easy and possible to do. Lewis, I see your question. Let me circle back. Let me just show the site real quick, and I'll circle back and answer that question. Okay, everybody wants to bookmark this real quick. It's called OneUp Trader. One like OUNE up trader.com. And when you navigate to this site, you're going to click on how it works on the menu bar up here. Now, I'm running out of time, so I don't have a chance. I can't go through all this. We'll take more questions in the morning on this, okay? And in fact, we'll probably do a little email where we send this out to everybody and get this all in your email, so you have something to look at. But you have what's called a novice or beginner account. We recommend that you go with the 25,000 80-20 split. The way this works is you can trade a maximum of 3 contracts. Your profit target, as I mentioned over here. Remember I mentioned this? For those of you who remember that, just real quick, you have to trade 15. You have to make $1,500 profit target in 15 days. You got to obey the drawdowns. You can't draw down more than 500 a day or 1,500 max. When you're funded, the first $8,000 that you make in that account is 100% yours, and the fee is $125. So if you take 25% off $1.25, that comes out to roughly, I think it's 93 something, 93.75. So it's less than $100. And you know, you just keep going in here. You can trade in Sim. Now they're going to send you a data feed. They're going to send you a login. They're going to send you a password. You're going to get all that all set up. And even if you don't have Ninja, they'll give you a Ninja Sim trial license to do that. Once you sign up for this, they'll give you all the goodies you need to get funded. Okay? Now, if you want to go another step up, the next account up is what's called Beginner. We recommend this for another $25. You can get 50K funded. Now, the requirements are higher. You can trade up to 6 contracts with 50K account. However, your profit goal is twice. You have to get $3,000. Notice what I put over here. To get a $50,000 account, you need to get 3,000 in 15 trading days. So the profit goal is higher. Your drawdowns are higher too. You can go up to $1,250 daily loss limit and $2,500 on the max. And that's going to be $150 a month. So what's $150 less 25%? Anybody real quick? What does that come up to? I think it's like $112.50 or something like that. 112.25, something. Yeah, roughly. So, I mean, you know, then they have other accounts. You know, they got one for 100. They've got one at 150, and they got all the way up here at 250. I just think for what we're dealing with, this is just a little bit too much. I mean, you can go up here and get that if you want. You still get 25% off. If you sign up for this one here with the discount using that code, it'll cost you roughly $93 a month. You trade, you get the $1,500. They'll actually fund. They'll put $25,000 in a trading account with pretty much the same rules, just the same rules. Only you get the first $8,000 you make, 100%. Over here, Beginner. After the discount, this will cost you $112 and change a month, $112.50 I think it is. After the 25% discount, you can trade a few more contracts, but realize that your profit goal is higher. It's $3,000. But, you know, in 15 trading days, if you hit, you know, by the way, bookmark this, OneUpTrader, how it works. And please jot this code down right here. Here's the code one more time. Capital VS1, capital U1, capital R1. And if you go sign up, put that in at your checkout, and they'll send you all the information for you to get started. Now, a word of caution when you're trading OneUp. If you're still learning and sorting out the instrument you want and all that sort of stuff, what you want to do is just go in, get the data feed, get everything all set up, and trade it in Sim. I would suggest not going into live evaluation mode with them until you have 3 consecutive profitable days. Say you trade YM, you're profitable one day. Profitable 2 days, you lose money on the 3rd day. I would wait in Sim. Okay, you try the Russell. Same thing happens. You come back to YM, you feel better about YM. You're watching, you're trading in Sim, and you hit 3, bam. One day you make 100, next day you make 250, and the next day you make 187. Then go in and start trying to get hit these marks, this $1,500 and this $3,000. What I'm saying is you can continue to trade in Sim and not use their account. I mean, not be fully, because once you start pulling a trigger in evaluation, then it's going to go into your trading record on the tracking. There's a whole tracking back end to it. Any final questions? I think that's a wrap. I'm going to close it out. I wanted to cover some more trades. Tell you what, we'll cover some more. Let me turn the recorder off here.